So the S&P 500 finished the week a little bit higher this week, but it kind of feels like pressure's building. Both the bears and the bulls are going at each other's throats, and it doesn't look like either side is truly winning or truly losing. So when we look forward to next week, which way is the market going to go? What are stocks going to do from here? So what's the bullish outlook for stocks going into this next week in April? Well, first off, the non-farm payroll report, which came out last Friday, Good Friday, when the market was closed, showed that the market and the economy is pretty strong and that we're not really in quite a bit of worry when it comes to employment. Then this week, we got the consumer price index, which showed that inflation is pulling back just a little bit. And then the producer price index came out and had a surprise cooling off of 0.5%, whereas the market expected an unchanged number. Both of these reports indicate that inflation is cooling off and then that we have a relatively strong economy, which could mean that stocks could rally from here. Additionally, strategists who are bullish, like Tom Lee from Fundstrat, says that we haven't ever seen 2 quarters of the S&P 500 having gains being in a bear market. For Lee, that indicates that we are going to continue to rally throughout April, and he is quite bullish as we head forward when it comes to stocks. And like I've been saying all month, April is historically the second best month of the year next to December. So if we're looking at statistics, April should be bullish for stocks going forward. As for the bearish outlook, the Federal Reserve released its March meeting minutes this week, and although the governors and presidents didn't see any recession coming, the staffers did, and they put into the minutes that there is a mild recession in store for the economy this year. To give you an idea of exactly how important that fact is, the Federal Reserve, including the staffers, never mentions a recession coming. So if the staffers see it, even if the governors and presidents don't, that's potentially a very bad sign. Additionally, even though the Producer Price Index, or PPI report, showed a decline of 0.5%, it's important to remember that economists want to see disinflation take place in a slow fashion, and having unexpected declines of that much is not necessarily a good sign. If inflation cools too quickly and disinflation turns into deflation, then it's possible that the Federal Reserve has tightened too hard, and this could actually send the economy into a tailspin. Additionally, one of my favorite analysts, Michael Gayed, says his conditions still favor a sell-off going into April, and that it might not start until later next week or even early the following week, but the conditions still say volatility and it's still got a bearish strength to it. I wanted to make a point of saying to beware any experts. I think it's incredibly important to listen to experts from all fields, but the problem is, in order to be an expert, they need to focus closely on one area of expertise. Regardless of whether or not they're bullish or bearish about their own area, they'll start to believe that their own area determines everything else. So whether you're talking about oil, gold, stocks, or Bitcoin, you'll find that you have these analysts that believe their area drives the rest of the economy. Even worse, when these analysts are right, they'll think it's because of their own area. Even if they're right, they might be right for the wrong reasons. It could have been a different catalyst, a set of catalysts, or something that didn't involve their area of expertise at all. So for me, I like to listen to lots of different experts, and I like to get lots of different opinions. Additionally, I try to stay away from analysts who are either permanently bullish or permanently bearish. For example, Peter Schiff, who loves gold, always hates Bitcoin, and he's always bullish on gold. Alternatively, you'll find a lot of Bitcoiners who are always bullish on Bitcoin and always bearish on gold. These perspectives are useless to me as a long-term investor because they never change their mind. No matter what's going on in their sector, they're always bullish. They think it's going to turn around, and that's just not helpful. I need to have both the bull and the bear case scenario. As I always say, I'm neither bullish nor bearish. If stocks continue to head higher into next week, then I'll continue taking profits. But if stocks start to sell off, I'll start looking at positions where I can add into weakness. In my investments in play portfolio, this week's winner was Coinbase, which saw a 13.79% gain based on the fact that Bitcoin broke through $30,000 and then broke through $31,000. When Bitcoin performs well, Coinbase tends to correlate because they earn more fees based on a percentage of the trades that are taking place. And when Bitcoin is bullish, there are more trades, and Coinbase makes more money that way. This week's loser was once again Canopy Growth Corporation, which lost an additional 9.49% this week. And again, there's no good news on the horizon for the cannabis stocks. Canopy Growth just keeps breaking through to new lower lows. In fact, the whole cannabis sector is showing such weakness that I've actually lowered my price target for my last buy in Canopy Growth to $1.01, and I truly hope it doesn't get that low. If Canopy triggers my last buy, my hands are off my position from that point forward. No matter how tempted I might be to add more to the position, I have locked in the risk I'm willing to lose on this particular investment. Over in the speculation in play portfolio, this week's winner was my super speculative gold miner, Gold Minerals, which saw a gain of 12.57% this week because gold rallied over $2,000. If gold continues to rally, we should see the gold miners continue to rally too. And it's important for me to reiterate that Gold Minerals is an incredibly speculative stock. It is a penny stock, and therefore every dollar I have in it, I'm prepared to lose in its entirety. It is extraordinarily high risk. This week's loser is the ProShares Ultra Short SPY Inverse ETF. In other words, it trades the opposite of the S&P 500, and it does so with triple leverage. Because of this, the S&P 500 gained 0.79%, which means SPXU dropped 2.21%. And this is just what's expected. When you're shorting the market and the market goes up, you're going to lose money. Over in the speculation in play portfolio, I did add to my ProShares UltraPro Short S&P 500 ETF when it sold off when the markets rallied this week. I added on the 13th with a buy at $13.24, and this lowered my per share cost 3.81% from $14.45 to $13.90. From here, my next buy target is $12.57, quite a bit above a past point of support. And my next sell target is $16.29, which you can see is quite a bit below a past point of resistance. And this is where I'll take profits. In the investments in play portfolio, it was time to take profits in Roblox on April 12th with a sale that went through at $47.30. While this only lowered my per share cost 2 cents from $45.07 to $45.05, it served the more important purpose of taking profits, 80.33% in gains on some of the shares that I bought back on May 9th of 2022 at $26.23. From here, my next buy target is $25.77, a bit above Roblox's low from late 2022. And my next sell target is $53.30, just below its high from 2022. This week, I wanted to talk about a position that I don't actually have on the website. There are several portfolios that I manage that I don't write updates about, but this is a gold miner, particularly a junior gold miner, so I wanted to cover what I did in it this week. This is a small gold miner, a junior gold miner called Equinox Gold Corp with the ticker symbol EQX. I opened this position on June 28th of 2021 at $7.15 because I believed that gold would perform over the long term, and it's been quite a wild ride. So when Equinox saw a rally this week with all the other gold miners, I did sell some of it on April 11th at $5.66. I also took profits in a number of other gold miners and gold positions that I hold, like GDX and GDXJ, which are the ETFs that follow the senior and junior gold miners respectively. Long-term viewers of my channel probably know that I am still bullish on gold, so it might be a little confusing why I would take profits in the precious metal when it looked like it's just starting to rally. The reason for this is that I have trading discipline. I've tracked gold and silver for a long time, and they have a tendency to have false breakouts. So when they occur, I always take some of my position off the table. As a long-term investor with no commissions to trade, it's important to remember you can always take profits in some of your position. You never need to go all out, just like you should never go all in. The sale locked in 53.39% in gains on a number of different shares that I bought from May 2022 to November 2022 with an average price of $3.69 per share. This sale ended up lowering my per share cost a full 8% from $5 even down to $4.60. From here, my next buy target is $3.40. You can see that was a recent low from back in March of 2023. And my next sell target is $5.77, which we just hit this past week. And I'm not going to sell that many shares, but I do want to take a little bit more profit off the table. As we head into next week, it's going to get more exciting because the earnings reports we're going to hear are going to move the markets one way or another. A big move is probably coming, and right now it's hard to tell whether it's going to be to the upside or the downside. Accordingly, I do what I always do, and I have a plan for both directions. What am I going to do if stocks go up tomorrow, and what am I going to do if stocks go down tomorrow? To learn more and to follow along with my stock shopping list, check out my website getirk.com, which is always 100% free. Please hit like and subscribe, it really does help me out, and I'll see you in the next video.